Thank you very much, Tracy, and all the panelists for the great conversation. I know it's 5:15, and I'm going to keep it short. Um, I think the whole day has given us a lot of food for thought. I think one is on policies. You've been hearing from conversation with Eddie Yu, with Ashley, largely on three sets of policies which are of significance. One is the reporting standards. I think we all need to pay attention to this ISB, International Sustainability Standards Board, which will come up with a set of internationally consistent reporting standards on climate within probably 1 year. And that standard will be adopted by Hong Kong and many other jurisdictions, of course, on a voluntary basis, but I think Hong Kong will be fast, given that actually is a chairman of IOSCO, which is organizing the implementation of the reporting standards. And the second thing is the common ground taxonomy, which we had a lot of discussions between myself and Eddie, and a lot of conversation with the market participants. I think the usage of that is actually quite flexible. The common ground taxonomy can be used to package assets and sell to the international markets, which recognizes such common ground taxonomy. I often say that the Chinese issuers can issue green bonds in Europe using common ground taxonomy, and the Hong Kong brokers can package Chinese assets, including ABS and bonds and many other things, using common ground taxonomy and sell to the international market. And the European investors or European issuers can consider issuing green bonds in China using the common ground taxonomy. And I think there are many other forms of usage, including adoption of the common ground taxonomy by a jurisdiction like Hong Kong, or in cases like Sri Lanka, which we are now working with, they consider developing the taxonomy using common ground taxonomy as a basis, which means that they'll be adding a few building blocks on top of the common ground taxonomy. The third set of policy issues are related to carbon markets, which I think will make Hong Kong very, very interesting. There are two potential options, as I stated briefly earlier. One is to be part of the compliance market in China, whether it's in Guangdong or it's a national market. I think Hong Kong should integrate into the Chinese mainland market so that our carbon emitters, such as the power companies, buildings, and transportation companies will have a market to join and be incentivized to reduce carbon. And secondly, it's a voluntary carbon market, which I think has a bigger potential according to many commentators, because it's potentially unlimited in terms of demand and supply. Really depends on how well we can organize the structure of the voluntary carbon market in Hong Kong. Beyond the policy discussions, I'm hearing lots of best practices in different areas, such as portfolio alignment approach, transition finance products, Scope 3 carbon accounting, risk analysis tools, and digital technology, including digitizing the solar assets and so on. I think too many of these, I won't get into the details, but indeed it shows that the platform that we are developing here, the GFA and its annual meeting, are providing this good conversation opportunities among members. Now, let me comment on one of the topics that came up so frequently today, which is transition finance. That's exactly the topic for G20 this year, and will be an even more important topic for G20 next year. I just had a conversation with the Indonesian authority a couple of days ago. They are going to host G20 as a presidency. And I think they will put transition finance as one of the key topics for discussion. And they're trying to converge on a couple of issues. For example, we need a taxonomy for transition, which means that the kind of technical pathways towards net zero need to be defined clearly. And these pathways are not just one pathway, it's many, many pathways. Just for coal-fired power generation, they probably have multiple pathways towards a target of becoming a renewable companies. For steel company, cement company, paper company, petrochemical company, airlines, they all have their own pathways. several different pathways. So I think we'll end up with a few dozen pathways which are recognized by credible specialists that's organized by government and regulators. And these pathways will provide a basis for taxonomy. You need to pick your transition activities out of the list of these pathways. The second key element of transition finance framework is a set of dynamic disclosure requirements. Why do I emphasize dynamic? Because the current disclosure requirements are largely static in nature. We're talking about, hey, I give you a green loan, you buy equipment so you can reduce carbon. This is a one-off purchase, and it's sort of static in nature. Dynamic means that I give you money as a company, and you tell me you're going to transform your operation to net zero in 10 years or 15 years. So you show me the path of gradually reducing your carbon intensity in the coming 5 years, 10 years, or 20 years. That's what I mean, a dynamic nature of the disclosure requirements. And the third thing is about products. We heard a lot about transition loans or transition finance products in the loan and the bond space, which you guys call sustainability-linked loans and bonds. But I think a more important asset class is equity-related investments, because a lot of these companies that require transition are in financial stress. They are probably very much in terms of leveraging ratio too high to be able to borrow. And they're probably under stress situation because the carbon intensity is so high, and they will be facing the problem of paying very high carbon prices for buying carbon quotas. So in such a situation, what you need is actually initially capital injection. It's equity investment. And that's why PE and VCs and buyout funds are very, very important. After these new investors come in and take over the company, then they can decide to transform the company into new operation, which is greener and lower carbon. If you use the current structure, business structure, the same people, same technology, and you give them loans, that's a very bad decision because you're continuing their high carbon activity. So I think first and foremost, let's think harder on equity-related investments for transition activities. And then it's the policy incentives. I think most of the transition companies require some support from the government. They require more than the regular green companies. Regular green companies, many of them are actually making very good money. They don't need government incentives. The profitability is very high. But those companies are facing transition pressures. As I said, sometimes facing financial difficulties, profitability is low, and they need more money to invest in fixed assets. That's where the stress is coming from. So I think in the initial phase, coming few years, government support in the form of fiscal, monetary, regulatory, giving them piece of land to develop renewable energy, and ensuring that they have a supply of biomass in a stable way. All these are forms of government support that's needed to enable the transition finance activities. And finally, I think we need to have the social element of the transition finance framework, because if these transition activities are not done properly, they will generate unemployment. They may generate a contraction of economic activities in certain regions, and it's socially inequitable. And we need to make sure that our activities supported by transition finance are as equitable as possible. That's why I'm summarizing sort of these 5 key elements of transition into one framework, and I'm hoping that we, the Green Finance Association Hong Kong, can help develop some good cases, good demonstration projects, so we can feed these experiences into the policy dialogue, whether it's at the G20 level or country level or jurisdiction level. Finally, a few words on what Hong Kong GFA can do. Certainly, we've been doing a lot already. As I said, we're doing 60 capacity building events this year. I'm not sure we can exceed that next year, but that's certainly a major area that we'll continue to focus on, building platform for knowledge sharing. And secondly, I think we probably need to pick a couple of key interesting topics for more study and more sort of brainstorming activities, especially transition finance and the application of common ground taxonomy. So let's think about how to do that in different working groups. Maybe the banking group and the bond group can focus a little bit more on the common ground taxonomy. And the equity group, the PE guys, probably looking to the transition finance with some good, cases. And finally, let me call for more participation. I think we have 8 working groups already. They're very active, but we need more participation. I think many working groups are having 10, 20 members, but we actually have 160 members in the GFA. So this is an opportunity for us to exchange knowledge and show some of these results or deliverables from the working group. And I'm inviting more existing members to participate in our working group, and also inviting those who are not members to join the GFA as members. So once again, thank all of you for attending the annual forum today, especially to you guys who are sitting in from 8 a.m. to 5 p.m. Today. So you are really the dedicated green finance supporters and advocates, and I'm looking forward to further collaboration with you for the years to come. Thank you again.